Hi, my name is Ihab Dalwai. I'm a senior fund manager at ICICI Prudential Mutual Fund. I've been working for last 14 years, and ICICI was the first place where I've joined. So the entire 14 years are with ICICI Prudential Mutual Fund. So I manage the ICICI Prudential Infrastructure Fund, the large and mid cap fund, and also manage the equity portion of the ICICI Prudential Multi-Asset Fund. So the scheme's name is ICICI Prudential Multi-Asset Fund. The fund is mandated to invest in at least three asset classes, which is equity, debt, and commodities. The fund can also invest in REIT and InvIT. Goal of the fund is to generate long-term capital appreciation or returns by tactically or by strategically allocating amongst these three asset classes. And we manage this fund dynamically, and the product is an equity taxation product for us. I think this is one of the oldest scheme which we have. It is completed more than 21 years. The scheme was earlier known as a dynamic fund, but after scheme segregation or the classification, this was classified as a multi-asset fund. So it's been managed as a multi-asset fund for last 7 to 8 years. The way we've gone about managing this scheme is that we, like I mentioned, dynamically manage the equity allocation to this fund depending upon where are we in the valuation cycle, where are we in the earning cycle. And also we have a similar approach for managing the commodity portion. Historically, what we have seen is that the equity portion of this scheme ranges as low as maybe 46-47% and can go as high as between 78 to 80% as well. So this is the range which we've managed the equity portion. The commodity portion has ranged from as low as 10% to as high as 16%, and the balance would be the debt allocation. From a risk categorization, this being a hybrid scheme, the risk level is lower than what a pure equity scheme would exhibit. And the way we manage this scheme as well, we try or endeavor to reduce the risk in this strategy. Primarily so by the equity approach or the investment philosophy which we have within the equity, which is trying to adopt a counter-cyclical approach, which we feel can reduce the equity component risk in this strategy. And the second point is that as there are three asset classes involved, because these three asset classes move differently in different phases of the market, correlation between these asset classes is low, and as a result of which the risk component is significantly reduced because of three different asset classes being involved. Generally, I feel that if any investor who's looking to enter into equities market or is new to equity market, this scheme is suitable for that kind of investor because, like I mentioned, the risk component is lower, so the volatility of the return journey for that investor will be lower, and he can have a better experience while investing or getting the exposure towards equity. And similarly, someone who is late in their investing cycle as well, for whom I think the priority is capital protection, but along with that, trying to generate returns. For those kind of investors, I think this is suitable. But I feel that this is also suitable for someone who has any surplus savings at any point of time, to some extent is confused in which asset class I need to invest in. I think the best solution is to invest in the multi-asset allocation and then leave it to the investment professionals to determine which asset classes should one invest in what phase of the market. Thank you.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.